Hi everybody, Marco Carvalho here from businesscreditbuilders.org. Today's video we're going to talk about how to get a business line of credit with a low credit score. In this video we're going to share with you a resource where you can get, there's actually 3 types of lines of credit they offer, and you only need to have a minimum of 551 credit score with Equifax. This is a soft pull. We're going to share with you step by step the 3 types of lines of credit, what are the minimum qualifications before you apply, how to apply, and what to expect in the approval process, and how to get started right away. So with that, let's get started. I do want to point out, this is not a merchant cash advance, okay? So as you know, with lines of credit, there are products out there where you can get a line of credit, and it's based on your future credit card sales. These lines of credit are not merchant cash advances, so I just want to point that out before we get started. As far as the first types of line of credit offered by ARF Financial is called the bankroll revolving line of credit. And there's some unique aspects of this. I'm going to break this down for you. To go and apply for these lines of credit, I'm going to share with you the process step by step, so don't go yet. You'll see the link here is arfbusinessline.com. Use that because it'll forward you and take you right to the secure application to get started. Okay, so let's first break down these types of lines of credit. The first one is called the bankroll revolving line of credit. This is one of their most popular lines that they offer. They have approvals up to $1 million. If you get approved, your initial draw is $5,000 or 10% of your line approval. So if you get approved for this line of credit, be prepared that you do have to at least pull some money out of your line of credit right away. You can't just let it sit there and say, great, I have a line of credit. You actually have to start using your line of credit. They just require an initial draw only of $5,000 or 10% of your line of credit approval. So that'll be deposited in your business bank account, and you can start using it right away. Now, what's unique with this is the repayment terms. Compared to MCAs, you may have to repay it in 12 months. They allow you, this is not a merchant cash advance, again, I want to point that out, but they allow you to repay this up to 36 months. So when you borrow on your line of credit, you have a 36-month repayment period, which is a good amount of time to repay. They do give you unlimited draws, so you can tap into your line of credit anytime you want. So if you pulled some money out today, next month or 3 months from now, you can pull some money out again up to your credit limit. The initial draws of $5,000 or more, so you can't draw like $1,000 or $500 like that. $5,000 is the minimum. Every payment that you make to repay frees up your line of credit even more. And there's no type of prepayment penalty, so if you want to pay that off early, you can do that. And this helps you build business credit. This doesn't report to your personal, but it does report to the Business Credit Bureau. So this is number 1. Let's talk about the interest-only revolving line of credit. Approvals from this is from $200,000 up to $1 million. They do require a minimum initial draw of 25% of your line that you're approved for, and you can pay interest up to 1 year. Now, after that, you can pay it off, but you also can have a repayment term up to 3 years. So you can have interest-only payments for the first year, and then obviously the remaining payments up to 3 years. You have to pay the whole thing off, the principal and interest, okay? So just so you know, that's what's called the interest-only revolving line of credit. You have low fixed payments, and you have unlimited draws during your revolving period. Every regular payment does free up your amount of credit you have available. So this is the second type of line of credit you can get approved for. Now, I know you're probably wondering, well, what are the requirements for each one of these types of lines of credit? That's what I'm going to share with you. What's really exciting is during their application process, I'm going to walk you through that. You don't have to determine what you're approved for. They're going to offer to you based on the review which one or all that you're approved for. Okay, and you get to choose which line of credit that you're approved for. Now, let's talk about the interest-only flex pay loan. This is a loan that you can get, but it also has a line of credit attached to it. I'm going to share with you what that means. Approvals for this is $50,000 to $750,000, and your minimum first draw is $50,000 for this. So you're going to get a loan for $50,000. That's the minimum first draw. You can pay interest up to 1 year, interest only, and then they roll over into an amortizing loan for up to 2 years. So interest only payments for the first year, and then an amortizing loan for the remaining for 2 years after that. What does a line of credit available during the interest-only period mean? What that means is, let's say you're approved for $100,000 total, but you only want a $50,000 loan. So they loan you the $50,000, okay, because that's the minimum first draw, $50,000. But the other $50,000 is now available as a line of credit to you because you're approved up to 100,000. So you could use that line of credit, that other remaining 50,000 during the first year because that's interest only. So that's how this interest only flex pay loan works. This also builds business credit. What I'd like to do is go over the qualifying questions. So there's 4 pre-qualification questions that's really going to determine if you can even apply for this types of lines of credit. So the first thing is the industry type. Now that you're involved in, there's preferred industries that they have, and they have expanded industries, and then they have restricted industries. So preferred industries is they love restaurants, they love retail businesses, brick and mortar businesses. That is their preferred type of industry. So if you have a brick and mortar location, or you're a retail business, or you're a restaurant owner, they love you, okay? They're extended industries. They have also other industries that they cater to as well. But the restricted industries that they will not offer these types of lines of credit are like if you're in construction, if you're in real estate, or even if you're a property management company, or if you're a consultant, or if you're in the credit industry, you do credit repair, or if you're anything type of finance, or you're a bank already, or in the credit industry. No, those are restricted industries. Or if you're in auto sales, if you're an auto sales company, that's a restricted industry. So how you determine if you're an accepted industry is I'm going to share with you in their application process. If your industry is not on that list when you answer these 4 key questions in their app, then most likely you're not going to be in an approved industry. So that will help you determine if you fall into this restricted industry category. But that's number 1, is you have to be in an approved industry that they want to extend these lines of credit to. Number 2 is your credit score. They will do a soft pull on your Equifax, your personal Equifax report. So this won't impact your credit whatsoever. It's a soft pull only. And you do have to have a 551 minimum Equifax score, which is a very low credit score when it comes to getting a line of credit. Most banks require you to have 680, 700 credit scores, exceptional credit, as part of their underwriting process. So this is a very exciting entry point for those of you who have challenged credit, but you have a good business with decent revenues. Then this is a great way for you to get a line of credit. The third pre-qualification for you is time in business. Minimum is 30 days in business. So that's really, really simple. You don't have to be 2 years in business, which most traditional lines of credit require you to be 2 years in business. A lot of fintech lenders require you to be at least a year in business, 6 months in business, etc. This is only 30 days in business. The fourth is monthly sales. This is really important because if you're only 30 days in business, but you're doing $17,000 a month, you're in your first month in business, then you qualify, okay? But you have to be doing $17,000 a month consistently, or $200,000 annually. If you're like a year in business, your gross revenue has to be $200,000. Minimum monthly revenues is $17,000. That's the qualification there as far as revenues go. There's no collateral. There's no tax returns you have to put up. No financials at all. So this is a real simple process. They're going to look at your past 3 months of bank statements. That's the key thing they're going to look at, is your bank data. And I'm going to get into that in a second. But these are your minimum qualifications before you even think about applying for this line of credit. So let me walk you through the application process. So when you go to arfbusinessline.com, that's going to take you to this page right here where it's going to ask what type of business do you own. So this is the page you're going to see when you go to arfbusinessline.com. It says right here, what type of business do you own? So when you do the drop down, if your industry category is not on this list, you most likely fall into a restricted industry, okay? So this is the approved industries. So you select your industry you're involved in, and then you click continue to the next question. So that's the 4 pre-qualifications that I just mentioned with you. They're going to actually pre-qualify you on this form. So the next question they're going to ask is this a home-based business? Unfortunately, they don't offer these types of lines of credit to home-based businesses. So if you do click yes you are, you're not going to be able to apply further at this point. But if you're not, obviously you click no, and they'll take you to the next question. Does your business generate at least $200,000 of gross annual sales? Now remember, if you're only 30 days in business but you're doing $17,000, then if you annualize that, yes, you're doing it. So you're going to say yes. Remember, that's the key thing is they're looking for $17,000 a month. You can only be 3 months in business, but if in those 3 months you did 17, 17, 17, that's fine. You can say yes. Okay, so when you click on yes, that's going to take you to the next screen. Has your business been open and operating under the same ownership for 30 days or longer? So you say yes there as well. If you don't, obviously you're not going to qualify. They want you to be more ownership in 30 days or longer. At that point, it's going to say continue, and you can start now beginning the the application. So that's why they have these qualification questions. They don't want you to waste your time as well as their time in going further. But if you do meet those qualifications, now they're going to take you to this particular screen. That's what happens. You get to this screen, and you're now going to fill in your name, last name, mobile number, email, and that's going to take you to the application process. So let me now share with you, after you go through, and just so you know, on this screen, if you want to have their application guide, that you click that, and it'll allow you to see what things they're going to ask you during the application, like what's your EIN number, how long you've been in business, etc. So basic things like that. The key is they're going to want you to upload your 3 months most recent bank statements, or you can connect your bank account using Plaid. Some people don't like using that Plaid technology where it's read-only access, so you can also physically upload your 3 months most recent bank statements. Once you go through the application process, let me just share with you, this is all done online, which is nice. As you go through the application, once you submit your application, they're going to do the soft pull on your Equifax report. So as you know, a soft pull doesn't hurt your credit. You have to have a minimum 551 Equifax score. They will verify your industry type to make sure you don't fall in a restricted industry. And they're going to look at your bank statements that you uploaded. The turnaround time for this is very, very fast. It's literally that same day or the next following morning. But what happens is a soft offer is released. And what that means is they look at that data, and they're either going to extend to you one of those lines of credit offers, or maybe offer you 2 of them. Let's say you qualify for the 2 different types, and you get to choose which one you want. You do have a consultant that goes through that with you, explains those programs, etc., and they send you the DocuSign depending on what type of line of credit you want to get your line of credit open. As far as bank data, what are they going to look at? They're going to look at your NSF history activity there. They're going to look at your beginning and your ending balances, the deposit activity coming into your account, transfer money out, if there's any large random deposits that are not consistent with the regular deposits, they may ask you, where do these large deposits come from? So they're going to really want to understand your business. They want to understand the revenues coming through. Now keep in mind though, if you do have, let's say, a MCA loan, and remember, this is not a merchant cash advance, these lines of credit, but if you happen to have one, they're going to look at that payment history as far as like, have you ever defaulted? If you miss payments more than 3 times, you're more likely going to get declined. Okay, so that's something they do look at. But if you've been making your payments on another loan that you have with an MCA company or some other type of line of credit, they're just going to look at your payment activity to make sure you're current and you're not missing payments. That's the review process, and then the soft offer is presented to you. So I just walked you through this process. ARFbusinessline.com. That offers these 3 types of lines of credit you can get with a low credit score. All right, so for those of you who want other types of funding, let's say you're looking more for revolving line of credit, you're looking for 0% APRs, check out businesscreditbuilders.org. This is our main website. We do offer various funding products like business credit card funding, etc. So if you're looking for a review there, just click on this pre-qualification review tab on our website, and we have a form here. You can upload a recent copy of your credit report. We'll do a review for you, and we'll provide you funding projections as far as business credit card funding goes there. Now, keep in mind with that, you have to have at least 680 or higher credit scores if you're looking to get a review for business credit card funding. We also have a do-it-yourself business credit building system you want to take a look at as well. So if you found this information helpful, give us a thumbs up. We really appreciate your support. Click subscribe. That way you're notified every single time we come out with a new video like this. With that, make it a great day, and we'll talk to you real soon.